This is the only trading strategy you will ever need. So as sellers are coming, they are going to eliminate these buyers. So automatically we should be expecting reversal to the upside. All right, so that's exactly how price push up. So where is our target? So in this video, I'm going to show you how the market works and how you can increase and improve your approach to the market. So the nature of the market is that it moves in just two ways. It's either it moves in consolidation or it moves in expansion. I know you will say, okay, it moves in reversal, just like ICT told us, right? Market will reset and ICT told us to consolidate, it will reverse, it will expand, right? To expand and so on, right? More like a cycle, which is accurate, which is true. But the truth is reversal and expansion are actually the same thing. But the only difference is that expansion is in the direction of the trend, while reversal is an expansion in the opposite direction. Now, of course, as we move on, you are going to understand why I make that statement and how you will be able to apply this to your trading, and a lot of things are going to change positively. So market moves in consolidation and it moves in expansion. Take note, if market is moving in consolidation, it means all these lows or all these highs are full of buy and sell orders respectively. What about expansion? For expansion, if price is expanding to the upside, it means there are a lot of buy stops here. For example, ICT told us that we have buy stops here, buy stops orders. Do you know that anytime you place a trade, for example, you place a buy trade, the same time you are actually placing a sell trade? It is true. Anytime you place a buy trade, you are indirectly placing a sell trade, because that is what the brokers are actually doing for us. Okay, so let's not waste much of the time there, because we have a lot to cover in this video. You don't want to miss any part at all. So still on the nature of the market, all right, so what you need to do is this. If you understand the method, if you understand the strategy, if you understand the way to buy low and sell high, then definitely you are going to be profitable. However, you agree with me that buying low and selling high is not as easy as I just said it now. All right, but I'm going to show you exactly one of the easiest way for you to identify when price is reversing or when price is expanding. Now, this doesn't matter whatever you are trading, any strategy you are trading, just pay attention to what I'm teaching you right now. Meanwhile, in case you are here to like the video, you don't want to miss out, make sure you like the video, and also don't forget to subscribe to the channel. And also, I will appreciate if you can leave your comments below. Okay, ask me questions, because I know some of you might not understand this. Okay, before I move on, I want to shout out to Hendray, which is HORC. How many of you know about footprint charts? Now, of course, I'm going to go a bit deeper, and we're going to understand this later. First, let's talk about the nature of the market. So the idea is for us to buy low and sell high. If we're able to buy low and sell high, then we'll be profitable. And that's the ICT's idea of premium and discount arrays. And that is very powerful if you understand it. However, how do you know the real premium or real discount? Okay, now for you to know this, you need to understand the buy, I call it the buy and sell battle. All right, so this is a key concept in the trading battle. All right, now pay attention. But it is common in footprint charts. For example, for those that trade footprint charts, for those of you that know footprint charts, you can just search it up on YouTube. Of course, we are not trading footprint charts as it were. Thanks to Hendray, the founder of the HORC, that shows us a better way to trade footprint charts using candlestick patterns. All right, so pay attention to details. So the first thing we want to talk about is aggressive participant. So we are going to understand this, then we'll know exactly how to trade this. Now first, what are aggressive participants? Traders who use market orders, and these are people who want to get in immediately. These are the active people with the money. They have the money to either buy or sell immediately. And what is their usual behavior? Their usual behavior is to run towards the area of liquidity. So anywhere there is liquidity in the price, they want to run there, take the liquidity and reverse. And you see, this is exactly what we want to learn. This is what we want to know. We need to know exactly when price needs to reverse. All right, at least even if it's not immediately, price gives us an idea of when it's about to reverse, so we don't have to do trial and error. All right, so for example, a buyer places a market buy, right? It's the ask price and price moves up. Now if it is the ask, price moves up. So listen to this: a buyer places a market buy. So for example, you place a market buy here. Remember what I said earlier: by placing a market buy here, market order here, you are executing both buy and selling orders. All right, so immediately you hit that, what happens? Price begin to push to the upside. What it implies is this: if the aggressors are able to absorb the sellers, are able to, if the aggressors, for example, are sellers and they are able to absorb the buyers, then it means that price is going to reverse. All right, so one of the goals of the aggressive participants is their willingness to pay the spread. All right, what does that mean? You know, when you enter here, your stop loss will be somewhere here. All right, your stop loss will be around this zone. Probably your take profits will be around here. So now listen, either way, whether price takes your stop loss or take your take profit, all right, this is one of the behavior of the aggressors. So if price comes, takes your take profit, it means they are willing to pay for your exit. They are willing to pay for that particular price. So immediately let's say you place your take profit here, or you even close it manually. So immediately they come here, what happens is that they are willing to pay you for placing the trade. Now this is why they are the market makers. This is why we want to trade in line with the market makers as well. This is very, very powerful. All right, now number two amongst this market fight, or I call it a trading battle, is the passive participant. Now understand that when the price is moving, when the chart is moving, there is a constant warfare between buyers and sellers, right? So for example, if price is trending to the upside, the left side of the chart becomes what? Becomes the passive participant. All right, so passive participants are traders who use limit orders and they wait to be filled. Let me give you an example. Remember, this side we have what? Buy stops, and buy stop is what? A limit order. Do you understand? So immediately price comes and trigger this. For example, immediately price comes here, creates a swing, going to the downside. It means the passive participants are here. They are now here. So when price, which are the aggressors, are coming, what they are coming to do, they are coming to take out the passive participant. And what are their behaviors? They provide liquidity. What liquidity? The liquidity for the aggressors. Remember, we said that the aggressors takes liquidity, while the passive participant, they give and provide liquidity. All right, so for example, a seller places a limit sell at resistance, or I already explained that. All right, and they actually wait for the buyers to take the orders. So what is their goal? Their goal is to control entry and exit price, and this is not urgent. So it doesn't matter. It can be 1 week, can be 2 minutes, can be 1 year, doesn't matter. Anytime the aggressors come, they are waiting patiently to be filled. Just like, consider it just like you taking waiting for your take profit or your stop loss to be hit. Now this is getting more interesting now. All right, so this one is very important. So the process through which, all right, so let's Just read this. When passive participants absorb the flow of aggressive orders without letting price move significantly. Now, this word absorption is. Now, absorption is simply the process by which the participant and the aggressors they meet. So they absorb each other. So, for example, we have this and we have buy participants here, and immediately sellers enter the market and they took out this high. All right, immediately they took out this high. We already have an absorption right here. You see, this absorption will either tell us if price is going to reverse or price is going to expand. Right now, pay attention. This is very, very important as things are becoming very practical as we go into the next slide. So these are the market participants. It's very simple for us to pay attention. Now remember, you understand market structure, you understand ICT, you understand any strategy, support and resistance. However, you do not know the people that are involved in those moves. Now, what are the importance? I already told you why you need to understand them, right? Of course, I'm going to show you a practical application of this. Now, we have all these swing orders. Remember, we have buy stops, we have sell stop, buy stops. We have orders in all of these places. Is it not true? And these are passive for the future. All right, and these are aggressors for what? For price selling to the downside, going to the downside. Okay, so what is the idea behind this? The idea behind this is for us to understand which people are pushing price to either the up or to the downside. So if buyers are pushing price to the upside, it means we need an equivalent amount of sellers to take out that high. All right. Now, for example, assuming that you want to buy 5 eggs. You want to buy 5 eggs, and we have the eggs here 1, 2, 3. For example, let's say we have 3 eggs here. Okay, and these are buyers. Let's assume these are sellers. These people, they want to sell 3 eggs. Now, it will take an equivalent amount of this egg to reverse price, or even greater than. When it's greater than, is even better because it's going to absorb it. Do you understand? So if price come and take one of these eggs, right, it means there's 2 more valid eggs. Are you with me? So if another one come, all right, they place another order here, takes his remaining 1 egg, it means price can still continue to the upside until this egg is taken completely. So once this egg has been taken completely, price can now start reversing. All right, this is very, very powerful. Now, you will be able to know that price is about to reverse even before your change of character. Now, we are not really against the change of character, not at all. You can use change of character as your confluence. However, you need to know what participant is this. And I hope you know that sometimes you will say, oh, this is your change of character, and what happens? Price will come, mitigate this, and continue to the upside. How do we know that? We know that by understanding the participant to the passive and participant to the aggressors. So if you are able to identify this, then you have solved half of your trading problems, because it shows you the true bias. So this is swing absorptions. So understand that the black schematic shows us that buyers are in charge but later absorbed by the sellers. So all of these are the buyers, and the sellers enter the market here. Let's clean that up. The sellers enter the market here. Immediately sellers enter the market, they absorb the buyers, and what happened? They are selling, right? So for example, for this high, we have the 3 eggs, and the sellers that are coming, they have let's assume that they have like 5 eggs. Okay, they come 1, 2, 3. All right, they've observed it. 4. At this 4th one, definitely price should be reversing. All right, so when sellers absorb buyers, it will reverse, but when same participants get involved, it expands. I don't know if you understand. Now this is what I mean. So instead of sellers coming to take this high, if buyers are still the one taking this high, just like in this scenario, price will continue trading to the upside. So you see, HORC will show us the bias of the trend. It is very, very important to pay attention to this. Now we are getting to the practical aspect. Of course, I will go to the chart and I will show you how this trade span out. Now these vertical lines are the beginning of the day. These vertical lines are the beginning of the day. Now the very important, the very thing you need to pay attention to is what participants are pushing price at the moment. So as you can see, price open. So if price, this is 1 hour time frame, if price opened here to the upside first, if price open to the upside first, then it means we have buy participants. Okay, so everything here we have buy participant, and of course, according to Hendray, price move in wavelengths, wave like this. So we have the opening range here, and price trades to the upside. This become our inducement. All right, or X, price takes that, and this becomes a target. So immediately the target is, because price moves in cycle, so immediately price gets to the target, this becomes the flip point. So if price comes here, if here was buy before, it means from this point down, even if price comes like this becomes sellers. Don't worry, in case you don't understand, watch the video over and over again. Ask me a question below or on the kind of video to make, and I'm going to make that for you. Okay, so in this case we have buyers are involved. All right, can we reduce our pencil a little? Let's reduce it so that we can understand. So we have what? Buyers here, and automatically this becomes our opening range low. So we have our opening range high, and this is our OR low. So once this is taken, this becomes our target. So immediate target is met. If price comes and take this low, instead of this to be D plus, so we represent positive with plus, okay, which is bias. We represent bias with plus. So instead of price to this to be positive, if price decides to come like this the same day, all right, that becomes D minus. All right, but as you can see on this particular day, we don't have anything as such. Okay, so pay keen attention. This is getting interesting. So this vertical line, this is weekly open, this W is weekly, D is daily. So as you can see, for Monday we have what? Price traded to the upside first. So we have W plus and D plus. Remember, if we have buyers and buyers, we're expecting what? Momentum absorption, which is we're expecting price to continue to the upside. However, if we have an opposing opening range, it means that if price come and take this high, we should expect a reversal or a deep retracement, depending on the opening range that are involved in the market. Do you understand? So the same process here. On this day, we have sell, price came open to the sell side first, so this becomes our X. So price comes, inducement, all right, let's call X inducement, and this ought to be our target. However, when we go to the chart, we understand why this will not work like that. Now, did you notice something? Remember, these are what? These are the passive participants, and these are what? These are the aggressors. Why? This is the current price action that came to take this low. So the participants are willing to what? Provide liquidity, while the aggressors are willing to take liquidity. Now we need to ask ourselves the question: the aggressors that are coming, what charge are they carrying? Are they selling or they are buying? In this case, they are selling. How do we know they are selling? It's because of the opening range. Okay, so immediately price takes this low, we're expecting reversals. All right, so automatically we mark our demand zones. So this becomes our zone of interest. We mark our demand zone. All right, and we look for our entry, and this becomes our liquidity target. All right, it is not complicated. Just understand this, and of course you see this is the chart and this is the application. Now I also want us to go to the charts. All right, now meanwhile, before we go to the charts, before I show you in practice, in case you want to get free setups from me, feel free to join my free Telegram channel. Check the video description, and also I would love you to follow me on X, on Twitter. All right, and I will appreciate it if you can do that. All right, so let's go to the chart. Okay, so we are here on the chart. Now on this chart, the same thing I just showed you on our board, on our drawing board, is the same chart I just showed you. Now, however, one of the things you need to pay attention to here is this. Now, this week, look at this week. What opening range is this week? If you already understand, what's opening range? Is buy. All right, so we have it as buy or arrow. But remember what we talked, what we said about signals. All right, buy. Okay, this is it. Price, price traded to the upside first, came down, met the target, and flipped to sell here. So we have W minus here. So here we have W plus. So it means that it is buyers that were involved in all this price action here, except from here. So from here like this, we have W minus. Do you understand? So the reason why it is W minus is because it flipped to sell here. And the reason why here is W plus is because the opening range is what? The buyers. Do you understand? So everything we have here is W plus for the week, for the whole week, and of course we have another week here. So that's why we had this as W minus for this week, and as this week opened, the same process, but in this case there was no flip for the week. There's no flip for the week yet. So we have our opening range here high, and all of these are weekly plus and daily plus. So automatically we need to start looking for our entries. Now I personally use my stamps. All right, I use my stamp for the entries. All right, I use my stamps for the entries. So for example, when price is here, we need to identify, okay, what participants are here. All right, we have passive participants, and what are they? We have minus and D plus, and the aggressors that are coming, what are they? They are W plus and D plus. So automatically, immediately price takes this low, we want to look for buy opportunities. Do you understand? Want to look for buy opportunities. Very, very important. So we can draw this ought to be our demand zone. However, you see that has been mitigated, so we can refine it to this week. Now beyond that, I also use the KDR receipt stamp, which is, for example, we have an inside bar here. We also have this as an outside bar. So automatically this could have been my zone. All right, but we can also refine this zone here like this, and we can start looking for our buys from here. All right, need to look for our buys from here. Now I want you to understand, if this D plus come and and sweep this D plus, price should continue to the downside. But it is when an opposite opening range, take an opposite charge, that's when we should be expecting reversal. All right, so for example, if this come in like this and mitigate this, then there's no way we are going to take this trade, because we just have to wait for probably retracement into a perfect zone, and we continue trading to the downside. Otherwise, we just have to keep it simple. All right, so let's play price and see exactly what we have. Okay, so price have not taken it yet. All right, so we have another day. So for this day, what do we have? We see that price traded to the downside first. Okay, price traded to the downside first. Okay, price traded to the downside first. So automatically we now have what? We have D minus here. Do you understand how we get that? So D minus, like we said, it means sellers are in charge of this day's participant. Why previous day is buyers, why the on Friday, as you can see on the chart, is what? Is buyers. So it will take sellers to eliminate buyers, right? So as sellers are coming, they are going to eliminate these buyers. So automatically we should be expecting reversal to the upside. All right, so that's exactly how price push up. So where is our target? Of course, this high becomes our liquidity. It becomes our target. Now this is very vital to understand. You need to understand this very well. Okay, so I personally caught this trade. I won't, I took some of these trades sessionally. Okay, now this is where you need to pay attention. All right, now this video is getting too long, so in case you want me to make another video, I recommend that you subscribe, or let me know, just comment below if you really love this video. All right, you can actually learn more by by subscribing to the channel, so that subsequently when I make more videos, you are going to understand this better. Thank you so much for your time. I hope to see you on the next one.